Welcome everyone to today's class webinar. We're going to be talking about tokenization and kind of the changes that the blockchain economy is having, and really the punchline of it all is how everyone can leverage that in their own businesses so that they can take advantage of this really coming trend. I'll talk about exactly what's happening, how the mindset of how you should understand it, and then how you can adapt it. Right. So the three things we're going to be covering in this webinar is how blockchain is going to be changing everything, right? We're going to exactly most people don't even realize it yet. It's still in the very early stages of its development, but we're kind of like mimicking very much the early days of the internet, late '90s stuff like that, and we'll talk more about that and what that means. But we're very early stage in how you can really apply this to business and be able to leverage this now, kind of getting early, to kind of get in front of the upcoming wave that's going to be happening. We'll be talking about that change. We'll also be talking about the mindset, right? How do you adapt to a change like this? How do you spot the patterns so you understand like what's happening by looking at kind of some stuff that's happening, or analogies that have happened throughout history, so we can understand and see what the patterns that are happening today, and see how we can prepare for it. And then I'll get into the nitty gritty about how tokenization works, or what exactly we do at SolidBlock with our tokenization, our smart contracts, and how they can be used for asset management, and then to lower costs and also assist with growth of the organization. So my name's Gavi. I'm head of marketing over here at SolidBlock. Awesome. We are getting a really awesome crowd here. I didn't say hi to you yet. I apologize. There's just more and more people coming in every minute. It's awesome. All right, cool. So SolidBlock, what do? We are a leader in the tokenization as a service industry. What does that mean? Is that we help tokenize real world assets to be able to take that ownership and move it onto the blockchain, which gives you more flexibility and more optionality with any real world asset, to be able to put it on the blockchain and get that optionality. We were the first company to ever tokenize a commercial real estate asset, which was the Aspen Hotel back in 2018. And we've been a leader in the space ever since, and we're going to be doing even more big things this year, so stay tuned for some of the upcoming news that will be coming out over the coming weeks and months. So let's just talk a bit about what blockchain is, right? Because blockchain really is the catalyst that's driving all of this. So if you go back to kind of like the internet of the mid '90s, I don't know if anyone's around in the mid '90s, how many people were in business in the mid '90s, and but imagine a time before the internet, right? Like think about how the internet impacts our work today, just with email, right? Just the fact that we're on this webinar today, how much the internet has changed everything, right, in the past 20, 25 years. Right, most of us probably can't even think about a time pre-internet. Back in the days, I remember back in 1997, I was much younger back then, 1997, the first book I ever bought on Amazon, and kind of what that was in terms of like a foundational technology as a catalyst for changes in everything, right? So blockchain is really like that right now. We're still in the very early stages, but kind of like in a nutshell where things have kind of gone until now. We've had really proof of concept with Bitcoin. Bitcoin was the first kind of proof of concept with blockchain, which is the ability to be able to store value in a trustless system, right? The challenges that Bitcoin has is that it's only able to really do one application, right? Which is move to ledger, moves money around digitally on the internet in a secure way. The challenge winds up being is that when you have to do multi-step processes, right? So which is where smart contracts come into play. So you have platforms like Ethereum, which is the leader kind of in the space, and you have the up and comers like Solana and Cardano and other layer twos that go on top of Ethereum. The problem with that Ethereum has, this is kind of my personal view on the platform, is that Ethereum has a scaling problem, because they use the same technology that Bitcoin does, which is proof of work. If anyone's heard anything in the news over the past number of weeks, months, one of the things that people talk about is the amount of energy that's used to mine Bitcoin. And it's the same technology used to mine Ethereum. There are other technologies. So you have Cardano, which I happen to be personally very bullish on, which is a proof of stake system, which is really building things from the ground up. So the point is that we're really early in this system, and what blockchain allows you to do is allows you to really build something on a decentralized system. If any of us were around in like the early days of social media, one of the promises of social media was that it allowed a foundation for anyone to be able to share their voice. Now, it didn't necessarily evolve that way because it was still centralized within a controlled system within Facebook and Twitter and etc. What blockchain allows is really pure decentralization, and the people who are able to come in and really build on top of this foundation are going to absolutely crush it going into the long term. So you can Google this, and I'll say in a future presentation I will have slides to lay all this out. But if you want to Google this, there's a great model. It's called the Innovators Adoption Curve. The Innovation Adoption Curve. It shows that when a new technology comes out, there's predictable stages that it has to go through. And the first stage is what's called the innovators, people who they love tech and they anything that's new, they want to jump on board and they want to use it. And the rest of us are kind of like, okay, this is the guy with his weird tech thing that he's kind of all into. As though the technology evolves, right, it moves into more kind of the early adopters phase. So this is like now where use cases have been proven, and people are really kind of understanding how this can be applied in different ways to existing businesses, to existing processes, making current things better. So this is right now kind of where we are right now in the overall blockchain evolution. The next phase is the early majority. This is so there's a great book by Jeffrey Moore. It's called Crossing the Chasm. He's like, this is the stages that are hardest to jump over, because when it comes to technology adoption, the new technology generally will have some type of hurdles to it in terms of people being able to adopt it, being able to adopt it. Maybe hard to use, might be clunky, right? If you think about how easy, let's say for example, Amazon is to use today. It's super easy to use because they spent 25 years optimizing their interface. But if someone were to go back and try to build an e-commerce store back in 1994, it was a nightmare, right? So that's an example of kind of the early adopter space. So you have that with blockchain and the interfaces that people are building on today. But as it becomes easier to use, right, that's where you jump into the majority phase, and that's where it's called crossing the chasm. And again, people who take advantage of that and are able to figure out how to do it now they're light years ahead of everybody else, who then wind up jumping on board when you get to that adopter, when you get to that majority phase. Then it becomes the late majority, then the laggards. Those are the final stages. That's when something becomes like truly mainstream, and you're not even thinking about it anymore in terms of like, this is just how we do things. So blockchain right now, again, very early in the early adopters phases of that innovation adoption curve, but again, following a very predictable pattern in terms of just mass use across a variety of industries, especially in the financial sector. DeFi is a huge Web3 are a huge component that people are pushing to be able to use blockchain for, and what's happening. So again, just going back to the example of the internet, this is exactly what happened in the early days of the internet. The early days of the internet, again, e-commerce is a good example. 1994, impossible to open the e-commerce store. Amazon did it in 95, I think they launched, right, and kind of worked things out over the late 90s. But what happened, this is also, I think, an important distinction to pay attention to, which is that it's very easy for people to get excited about technology, right? So if most of us, again, if we're in the investing space, we know that in 2000 there was a huge .com crash, and that was because people got really excited about the technology and forgot the core business principles, right? And just a real good example of this was Pets.com versus Amazon.com. So Amazon.com still around today. I'm sure everyone buys from them often. Pets.com was also a company that raised millions of dollars in venture fund, and they collapsed. And the reason they collapsed was that Amazon, Jeff Bezos has a very good story where he says, people ask me, what do I expect to change in the next 10 years? And he said, I have no idea what's going to change, but I'll tell you what's not going to change. I don't really see a time where someone says to me, I want something shipped to me slower, and I want it to cost more money, and I want less optionality and lower quality. So that was what drove Amazon. Pets.com, their message was, hey, we're going to give you pet products for more money, and for more money than the store up your street, and for it'll be shipped to you in 2 weeks, right? So again, it's .com, right? Everyone's excited about the technology, but the business use cases isn't there. So again, that's something really important to pay attention to when it comes to blockchain and blockchain development. Right now, people are going to be talking about blockchain. Very easy to get confused about and distracted with the technology and ignoring the real world real world use cases on how it can be done. Again, we want to be the Amazon.coms of our industry, not the pets.com of the industry. So again, just imagine we're in the early days of the internet. The stats, kind of where things are going, to understand where this trend is going. A couple of stats here. World Economic Forum says that in the next 5 years, 10% of all GDP activity, think about it, 10%, will be done on blockchain in the next 5 years. Right, that's their estimate right now. Could be slower, could be a little faster, but that's a huge adoption curve for that to be done. Same thing, and specifically when it comes to tokenization, which is what Solidblock does. That the tokenization economy is expected to go 2.3 billion, which is what number was last year, to 1.4 trillion in the next 5 years. So I don't know what that's like, a 4,000. I don't know. Correct me in my math. Someone can leave a comment in the section here. I think it's something like a 4,000% increase expected over the next 5 years. The point is that there's a trend happening in the blockchain space, in the blockchain adoption space, and the real question is, how do we actually apply this? So again, another thing I want to understand, I want to just explain in terms of like what happens if we kind of ignore these technology changes. Very easy to ignore it, and the business world is littered with stories, and I'll give a good example of this. I think it's actually a really good story about what happens when we ignore technology adoption. So I remember when I was a kid, Kodak cameras were the big thing everyone was using, and they were the leaders in the film industry, right? They at one point, by the 70s, they had hit an 80% market share in their industry, and by the time they got to 2012, they declared bankruptcy because they couldn't pivot fast enough to the digital camera technology change for the business. They were kind of attached to this razor blade model that they really liked, and they couldn't figure out or didn't want to really adapt to the change to digital cameras. Now, here's the interesting thing, is that the company that actually invented digital camera technology, it was invented by a guy named Steven Sasson in 1975. Steven Sasson was on the R&D department inside Kodak where he invented this. Kodak itself invented the technology that eventually destroyed it. What happened was they looked at this and said, listen, we have 80% market share, and if we add this to our product line, then we're going to cannibalize our existing business, right? And Wall Street's going to hit us, our stock will go down. People are going to start saying that we don't know what we're doing, right? If the stock goes down and the earnings go down for a number of quarters, like the executives saying themselves, we all get fired. So what they did was they patented the technology, and when you patent something, you can shelve it away, put it away for the 20-year period if it's not actually used. And the thought was, listen, we'll put this away, and then in 20 years, we'll all be retired. It'll be somebody else's problem. So late 90s come, the patent becomes publicly available, and someone goes, commercializes it, and then the rest is history. Kodak couldn't pivot fast enough, and their unwillingness to adopt new technologies wound up being their downfall. So again, very, very kind of important lesson to learn. So that's kind of the background in terms of like blockchain, where blockchain is going, the understanding like what does technology adoption look like when it comes to businesses, right? And what's the mindset involved in being able to adopt a business or adopt technology into your business. So let's now go to the fundamentals. Solidblock does. What is tokenization, right? So tokenization, very fundamental levels, taking your ownership of of something, a real world asset, and fractionalizing it, right? Instead of and then putting it on the blockchain, right? Putting the ownership of it on the blockchain, and then you can then manage the asset on the blockchain. So let's just kind of go through details of how this works. So let's give an example of a real estate project, right? Same thing could be done if you're trying to tokenize debt, or really any kind of any type of balance sheet asset that you have. That what you're going to do, the process goes as follows. So let's say if we're not doing tokenization, it goes like this, right? Let's say you get a bunch of people together. Could be 5, could be 100 LPs, right? Doesn't matter. The process is the same. You will create what's called an SPV, right, which is essentially a holding company for the asset. And then everyone who gives money towards the asset, whether you're trying to buy it, whether you're trying to do a renovation on it, whatever it might be, doesn't matter what the details are. This is the process of tokenization. The amount of money they gave for the amount of money they're looking to raise, each person is now given shares in that company. So they now own, let's say, 10% of the company if they invested 10%. of the raise they're looking to raise. So they invested 10%, and now they own 10% of that company. Now, let's say if it's a building, they take the money, and they're going to go invest. They're going to go build. They're going to do something to it now, and the original investors holding their money in that asset until basically the asset gets sold. They do want to liquidate it. It can be a pain. You have to get lawyers involved. Not so easy to do. Usually they're putting their money away expecting it to be gone. When you do tokenization, so here's basically how the process works instead. So you'll create a PPM, right, for the project, and what we do with tokenization is like a legal framework. There's 3 stages: legal, digitization, and securitization. So what that means is you have the legal aspect of it, which is we create an addendum to the PPM, which basically allows that asset to be digitized. Everything in there, right? Whoever, the details will say, the percentage holder will get this amount of dividends, this amount of shares, but all the details. And the addendum is a legal bridge to be able to allow for that digitization of wherever the directions are within the PPM. Then a smart contract is created to actually execute on whatever the legal requirement is. We're starting from legal here, right? So when you're starting from legal, it's the same way you would do things today, right? Without tokenization, right? The same legal framework, same requirements. Tokenization doesn't really do anything in terms of enhancing value to the asset. Like, it's not like a Band-Aid. That's if you have a bad deal, tokenization doesn't help it, right? The idea is that you're able to use tokenization as a tool to take a good deal and get a lot more flexibility, a lot more optionality, and be able to manage it much more easily, which saves money in the long run. So I'll go into a little bit of details about what that means in a second. So again, so you're basically taking the ownership of this, right? And the ownership, instead of people now owning shares, the ownership, the equity, the ownership is moved over to tokens, which is managed by that smart contract. And then the individual investors then are given the tokens, they can hold those tokens. And then after a 1-year lockup period, that's an SEC requirement. After that 1-year lockup period, then they're welcome. They want to go and trade it. They want to go liquidate some of their assets. They can basically what it does is it turns real estate and other real world assets into a tradable product that can be traded and liquidated just like stocks, right? So that's the real benefit and advantage that tokenization has for the investor. Now, the person who's actually owning the asset, like what happens, or what's the benefit really for them? So one of the things like people don't think about is they think about, oh, well, we can put this on a secondary market, which you can do, right? And we get more brand recognition out of it, and potentially make some, get some more investors from it. That's good, right? One of the real benefits, though, is if you think about what's the cost of actually managing the asset afterwards. So if you are managing that asset, and every quarter, let's say you have to do distributions, right? Let's say there's some income that's generated from the property, and people have to be sent a check, right? So you got to get there's an accountant's office that gets involved, a lot of software that calculates everything, and then checks are mailed out to the people, or they just can decide, okay, I want to reinvest it, whatever they decide they want to do. But the point is that the person managing the assets to deal with all of this. So imagine if you can literally take an entire accountant's office and turn it into computer code to manage the entire thing. Right, that's what blockchain really allows you to. Now, we're actually doing a study right now, and getting some more details. But I'll give you a little sneak preview of kind of what this means. But you're looking at potentially a 30 to 60% cost savings of managing the asset over the course of 3 to 5 years. So that's a big deal in terms of like where the cost saving comes. And then this goes back again to like the like technology adoption. Imagine the people getting involved in this now, or the jump start they're going to have, right? Instead of them spending the money that they would be spending on their books and records, on their distributions, management of the whole thing, they're reinvesting that back into growth. So like, again, the whole point is this creates a lot more optionality with everything that you do in terms of your assets. And it's not just real estate. You can tokenize debt, you can tokenize mortgages, you can tokenize like anything that's a real world asset balance on the balance sheet is something that can be tokenized through the same exact process, right? Not only that, it's very accurate, right? So like you've also removed human error from the entire process. You don't need to be managing sending stuff around via spreadsheets and email anymore. Everything's done through a very, very nice, clean dashboard, and be able to manage things that way. The other thing also, I just want to point this out because a lot of people sometimes like misunderstand this. Tokenization is not an easy capital raise or not like a magic capital raise thing, but it is a tool that can help you raise capital. Just because there's a benefit being able to give people self custody of their ownership, of them being able to liquidate if needed. And if someone's going to use, like, again, so I'll go to the next step of the process, which is like, you have to do the primary raise, right? So in terms of the primary raise, it's not part of of Solidblock's scope. We have partners we can refer you to, but you can go to a crowdfunding site and say, hey, listen, it's just like a regular real estate deal that we're trying to raise money for, right? Just Tokenize now. Same thing. Might even be a benefit to it for a crowdfunding site to be able to want to use that, because they can give tokens now instead of having to go through the same process where, even though you can do a Reg D 506C and people can get in for smaller amounts, they still need to buy shares in the company. If they still wind up having the same issues or problems that someone might have with liquidation and stuff like that. Now, one other thing I think it's important really to add to address. So, crypto's been in the news a lot lately. We had earlier this month, we had the Terra Luna UST collapse. So I had gotten a question. I was on a panel, and somebody asked me a question. It's like, listen, like, what do you guys do to protect yourself from these types of things that are happening in the marketplace? So I think it's really important to make a distinction between kind of what Solidblock does with the tokenization space and all the other things that go on the crypto market, NFTs, Bitcoin, Ethereum, etc. All of those things are crypto assets, right? You take possession of the Bitcoin itself has value, right? NFT has value, right? And the price fluctuations are driven by the market, really, because there's no other real controls, basically deciding what the price is, right? Like, that's kind of really what drives the price of those things. We don't play in that space at all. What drives the value of the token, this is it's a security, right? It's using the utility side of blockchain to basically plug into an existing process to make it better, faster, cheaper, etc. And what we're doing with that is, or really what drives the value of those tokens, doesn't really have anything to do with the token. It has to do with the actual NAV of the property, right? Of whatever way you would value the property outside of the blockchain tokenization space. That is 100% true here. And this token, which is a what's called a divided, wherever the value of the property is divided by the number of tokens, is the price of that token. But again, the key thing that's driving it is the value of the actual property. Not only that, let's say you tokenize a property, it goes onto the secondary market. Someone comes in, decides they want to undercut you and buy the token at 50% below value. So with the smart contracts, you can put a floor in there. Let's say 5%. Let's make something up, right? Put a floor in at 5%, that the price can't go below 5% of the NAV. So you have complete control over that, right? You still have movement within the market for people who do want, let's say, it goes up in value, right? Obviously, it's we all like that. But you have that ability, you have that control to be able to do that. But again, it's fully compliant within SEC regulations, which I think is a really, really important point. Anytime you're dealing with a new technology, that can be a question, right? People might say, hey, listen, like, I'll get around the regulation, but in this case, this is fully within SEC guidelines. There's no gray areas here, and I'll just give it kind of a good way of understanding any I call it noise that you hear about regulation in any space, but crypto and tokenization and stuff like that, is that if you let's say went back in time 120 years, right? Steel had just been invented, and you go to a politician or a regulator and you say, hey, I know humanity has never built a building more than 5 stories tall out of wood and mud. We have this new material called steel. Do you think it's a good idea for us to go build a skyscraper that's 110 stories tall? Like, what do you think they're going to say? Like, they're not going to know what to say. So this is also the nature of being very early on in an industry, that people need. Like today, someone would laugh at you if you suggest that, because it's been done, it's been proven. And anybody who understands, again, the technology, whether it's blockchain or whether it's steel, if they understand the technology and they understand what it can do and the fundamentals and the principles behind it, then they'll know what the future is going to kind of bring. And then all we have to do now is just prove it in a way that everyone gets on board and accepts this as the truth, as well. So So the guys, that's going to wrap everything up a little bit, but I really hope you guys got some value out of this presentation today. Again, the three things that we covered. Again, we going back and understanding just how blockchain is changing everything. What's the mindset for change? Again, how do you spot patterns in terms of technology adoption? Again, from previous things, how it impacts business, and then how blockchain is going to do exactly the same thing, and then the details, exactly how tokenization, smart contracts work, and how it can be used for asset management, right, to lower costs and grow over time. So if you have any questions, you guys can drop them into, there's a Q&A section here. Assuming this is working. No one's dropped anything yet. If you have any questions, feel free to drop them. If you are, you're representing a firm or you're representing your own self and you're interested in, or you have a property you would like to tokenize, kind of get, again, you have a mindset of an innovator, right? You want to jump on board and be able to get involved with this. You can go to solidblock.co. In the upper right hand corner is a purple button that where you can fill out a call, kind of walk you through the process and answer any questions you have about your specific asset and tokenizing it, and everything. Okay, cool. So I'm getting some questions here. Let's see, what do we got here? Okay, thank you for your time. No problem, Eric. Bart, is there a replay available? So I'm actually not sure if there's an automatic one that's sent out from Zoom, but our team is going to take this and be posting them on our social media channels, probably the whole thing, as well as also clips of it. Bart, is there a written summary that can be mailed? I haven't thought about that. I can talk to the team to see if that's something they can get done. Okay, does tokenization negate any piece? Okay, so that's actually a really good question. Whoever you are, Mr. Anonymous attendee, does tokenization negate any pieces, or I guess you're asking if it negates needing to have an accredited investor? No, it does not. For a primary raise, you would need to have an accredited investor for that primary raise, the same way you would without tokenization. Again, this is tokenization is a tool that you're kind of plugging into the existing system. Everything from the legal perspective is still what's it called, required according to regulation, according to law. We got next here. All right, please explain the need to hold the token for 1 year before activation. So what I should do one time, we should do one of these calls with our legal department, because they can answer the legal questions in more depth than I can. But basically, there's an SEC rule that once you have an initial offering, I guess initial security is issued, I guess you would say, there's a 1 year lockup period before you can sell it. And basically it's I believe it's in I'm gonna go a little, I believe it's in place to kind of keep people from doing like pump and dumps. I think I don't know the background behind the regulation, but basically that it's an SEC rule that requires it, so that's why it's there. Okay, cool. Anyone else have any other questions? Hold on, let's see. Hold on a second. Let's see, hold on a second. I'm seeing comments pop up. I'm just trying to find out where they are. Here we go. Okay, fine. Let's see. Are there multiple legal ways to tokenize? I'm not sure what you mean by that. Are there like different like Reg D 506C and other regulations? Like, is that what you ask? Is that what you're asking? Again, if you're able to do it with regular real estate, you could do it with tokenization. Again, because the tokenization, what you're doing is you're just moving the equity over to tokens, and then the whatever regulations are in place regarding the capital raise. Let's say, again, I keep going back to Reg D 506C because that's what allows you to raise from a larger number of people with smaller amounts. But again, if it's a smaller number of people, it's the same rule applies. Again, according to whatever the regulation is, and then what the tokenization is doing, again, you're just digitizing whatever exists in the real world, and moving over smart contracts. So tell us how SolidBlock fits into all of this. Again, I'm really hoping that when I do this webinar next time, I have slides. I didn't get to it before this meeting. I apologize, but where SolidBlock fits into this right now, again, is basically the point where you have an SPV that's created and a PPM that's created, and the point where the shares are given to the investor. So we plug in right there. Basically, what we do is we create a legal addendum to the PPM that allows for the digitization of whatever is written in your PPM, and then we move the details or the requirements from that PPM to a smart contract to manage whatever the requirements are for distributions and ownership of the asset, and then the tokenization of creation of those tokens, the distribution of them to whoever the investors are. So that's kind of where we plug in there, and then as well as also having a platform for you to manage your tokens. I should back up. There's more to that. So we give you a platform and help you kind of do that initial capital raise. Again, we're not doing the capital raise. If you need capital raise, we have people we can refer you to for marketing and for other things. But we'll give you the platform with the page that you can send people to, where they can actually buy the tokens, until you raise whatever your cap is. Let's say you're looking to, let's give an example. Let's say you're looking to raise $500,000, right? So you want to send a bunch of people to the page, and they'll buy, until the $100,000 are raised. Then that's it. That round is closed, and everyone who bought, the money goes to you to be able to go start the development, and they're all given the tokens to be able to then hold that point. Okay, hold on. Let's just see. What else we got here? So are we on board? Yeah, okay, fine. Here we go. Alexander has the biggest problem with the crypto sphere, and even more STO or similar assets, is the lack of education. Education comes first, making sure we can onboard as much individuals as possible. The funny thing is like, so I'm actually, like, I happen to be working on a project, so I'm hoping done next few weeks. It's kind of like a research project to basically kind of go to real estate investors and ask them, listen, would you be willing to actually take less equity in a project if you could get liquidity? Right. That's really, for investors at the end of the day, is really that's really the two main benefits to investors is the liquidity aspect and the self-custody aspect of it. So I like adding tokenization to kind of their portfolio and stuff like that. But that's a big deal. Again, real estate is real estate's the biggest market cap in the world for a reason. It's one of the best places for people to store their money, particularly with inflation out of control. Real estate will be, long term, is going to be the best place for people to hold their money. But it has all the challenges that come with it, right? So tokenization really kind of allows people to get right the returns and security of real estate with the flexibility of stocks. Right, that's kind of really where we sit and enable in the marketplace. And yes, more and more people are going to be on board this. And I think also, like, I'll say, I know for me, it's like people who made money in the crypto space, right, who understand or are comfortable with that world, they get gains, and it's like, well, now I'm ready to take some of this out of the volatility of this crypto asset space. And now what you've done is you've now created an environment where they can walk right into it and go invest in traditional assets, using a method that they're already familiar with. Like, again, being ahead of the curve, right? We spoke about, think about the people who are in their 20s and in their 30s, right? Who are just getting started, in the investments. Think about where they're going to be in the next 5-10 years, right? Like more and more people, they're going to make up more and more percentage of the new investors, and being able to kind of enable that is going to be a huge benefit. Yeah, once people are educated, their eyes light up. Exactly. So I hope I've educated some of you on this call today. If your money raise is lower than 5 million, you still need to raise from accredited investors. Yes, you do. Cool. All right. Anyone have any other oh, wait, there's more questions. Sheesh, you guys are, I'm gonna have to do some more of these, guys. Seriously. I'll try to make sure I incorporate some of your questions into the next presentation. So what's your plan to onboard getting more real estate deals? We actually have a pretty big pipeline. We're closing with a bunch of people now in the next few weeks. Like, there's a lot of, like, it comes in waves right now, as we're continuing to go. So that's going to be what happens there. Can we digitize with tokens of our choice, such as Ether? Could you digitize with, like, are you asking, like, could you convert it to Ethereum? Is that what you're asking? Or, like, people could buy it with Ethereum. That's what they can. That's not a problem. But usually, what you want to do is you want to have a specific coin or token that's created specifically for the property. Cool. Awesome. So great. So guys, thank you everyone for thank you everyone. Here, Joe asked how Solid funded. So we have funding. Tim Draper is actually one of our investors. You can go probably check that out. I think it's on our blog. We spoke about it. We got a big round funding from him. They're really big into kind of the adoption of blockchain or blockchain adoption. And it's a pleasure to work with them. They're real visionaries when it comes to kind of where things are going right now in this space. So guys, thank you very much for joining. Really, I had a lot of fun. I'm going to do more of these webinars in the future. And I think I'm going to do my best also to incorporate more of these questions into the presentation. This is great feedback from everyone, and there will be more posts from this going out on social media, and we will also try to get a recording out to you guys in the next few days. All right, awesome. See you, everyone. Have a great day.